These are difficult economic times and we all know it. It's quite tough to put food on table for a family of four. Today, the value of dollar is decreasing relative to cost of living. Consequently, we try to find methods to reduce our monthly expenses. As such, in this video, I'll show you the fastest way to retire early and live your life through dividends alone. Hello and welcome to Investors Facts, where we address all of your investment needs and questions. Stick around till the end of the video to learn more about investing and be one step closer to the financial freedom you've always wanted. Dividend growth is one of the most popular forms of investing out there, mainly because the thoughts of receiving the genuinely passive income in the form of dividends is pretty attractive. Being able to receive enough money in dividends to either pay most of all of your expenses or make enough to live a fuller life while not being bogged down by a job is a big dream for many of us. But there's a severe drawback to dividend growth investing, and that is to live off dividends. Either partly or entirely for your income requires a massive stock portfolio. We're talking hundreds of thousands of dollars, or in some instances with YouTube dividend investors. I've seen over $1 million in stocks and ETFs to reach that point. This is pretty discouraging to a significant number of investors out there. Let me know if this story sounds a little familiar. Let's say you're 30 years old, and you make the decision that you want to be a dividend growth investor. You decide to take $10,000 in your savings account and put it into one of the most popular dividend growth stocks out there, Johnson & Johnson. J&J has consistently raised its dividend every year for the last 58 years. Along with its stock price appreciation, it seems like a no-brainer that this is an excellent investment for a dividend growth investor. Before you know it, you're on your way to creating a more prosperous future full of passive income. But then it dawns on you that Johnson & Johnson stock only has a dividend yield of 2.48%, with the stock trading at $166.48 per share, which means that you're only receiving $1.01 per share every quarter that you own. That comes to a little over 33 cents a month for every share of Johnson & Johnson that you own. If you invested $10,000 in J&J at $166.48 per share, that would be enough for you to buy 60 shares. With 60 shares, you make $60.60 every quarter, or a little over $20 monthly. Earning $20 monthly after investing enough money to buy a decent used car doesn't sound so great. But now, here's the key point behind dividend growth investing. J&J rises its dividends every year. So that means that as long as the company doesn't fall on hard times, it will continue to increase that dividend yearly. So you have enough patience, and eventually you'll get paid more dividends as time goes on. Let's say you then decide to see just how much Johnson & Johnson typically raise their dividend every year. So you go online and realize they have a history of raising their dividends yearly by a measly 4 to 6% per year. Using a dividend calculator, we can estimate how much money we'll have in the future with this investment. According to Seeking Alpha, J&J stock has an annual dividend growth rate of roughly 6.13%, which will help us determine how much our dividends will grow. Using our $10,000 example, after 40 years of waiting, you will have earned a measly $41,138.62 in dividends if you didn't reinvest them. If you decided not to spend a penny of your dividend income on something you wanted, like a new car, a nice vacation, or simply paying your bills for 40 years and just kept buying more and more shares, you would have made $64,231.12 in dividends. If you think Johnson & Johnson is the exception, you will find a similar pattern with other top-rated dividend growth stocks. Let's look at other top-rated dividend stocks and see how J&J compares. Here we have the 3M Company, another prevalent dividend growth stock. It currently has a dividend yield of only 2.98%. Here's Procter & Gamble, which presently has a dividend yield of 2.55%, McDonald's 2.21%, Emerson Electric 2.2%, and the list continue. Now, sure, you can keep buying more and more shares of Johnson & Johnson stock and other dividend growth stocks as we discuss over the next few decades, but you realize that the goal of being able to live off dividends either partially or entirely for your income is starting to look more impossible if you want to achieve this before you're significantly older. Knowing this information causes many dividend investors to stop dividend growth investing altogether eventually, because they realize that their dream of completely living off dividends won't be achievable until they're gray-haired and mostly done with their lives. Not to mention, if you're already approaching or at retirement age, you don't have decades to wait for you and J&J dividends to appreciate. You're looking for investments that offer you high amounts of dividend income now instead of later. Maybe you'll have more than $10,000 to invest, but again, unless you're fortunate enough to have millions of dollars saved up, being a dividend growth investor is not going to be an ideal situation. Being a dividend growth investor only works for those who already have millions of dollars to invest or those who are young and willing to sacrifice a significant amount. At the same time, they're young, so they can be wealthy when they're too old to enjoy living off their dividend income. Now I get that some dividend investors want to live like Warren Buffett. They want to keep investing and running up the score clock. But remember, Warren Buffett doesn't exactly spend a lot of his money. He lives very frugally. If you want to start earning high amounts of dividend income every month now as opposed to decades in the future, it's clear that you're going to need to target different types of investments. You'll need to set your sight on investments that have higher yields. That's a no-brainer. But there are some essential things to keep in mind, like avoiding stocks and funds that are steadily decreasing their dividend distribution or investing in companies that are very, very risky. People ask me what the best investment is for someone looking for not only high dividend income but also growth in its distribution amounts and share price. And I am convinced the best investment that meets those qualifications is covered call ETFs. These are a newer type of investment that hasn't become mainstream yet, but they're a gold mine for dividends. I've been asked what I'd invest if I only had $100 or $1,000, and covered called ETFs would always be my first pick. Probably the most well-known covered called ETF out there would be QYLD, which currently has a dividend yield of 11.49% and pays monthly instead of quarterly dividends. The key to understanding how these ETFs generate such high numbers of dividends is to how options work. Seeking Alpha, QYLD has grown its dividend for over 2 years so far. And remember, that's already with a current dividend yield of 11.49%. Another option is the ticker symbol NUSI, because in addition to buying call options on its holdings, it also sells put options. This means that on days when the Nasdaq 100 falls, this ETF mirrors NUSI's share price and won't fall too dramatically. But the trade-off is that this ETF has a much lower dividend yield. It's still much higher than average at 7.88% though, and you can see this fund was just launched in December of 2019, and since then, it had a good amount of appreciation in its share price. Taking our original 10,000 example, if you put it all in QYLD at its current share price of $22.56 per share, you would have enough money to buy 443 shares. At its current share price with a yield of 11.49%, 443 shares would earn you roughly $101.13 monthly. That's much better than Johnson & Johnson $20.20 per month. And if you choose to reinvest those dividends every month, think of how much incredible that snowball effect would be in building up a massive income-producing portfolio. Alternatively, You could choose to reinvest your dividends some months and spend them other months until you've reached the point where you can fully live off your dividend income. Here's another excellent type of investment that pays higher dividends to investors: BDCs, or business development companies. They've been around since 1980, and they're companies that provide financing to small and medium-sized businesses to help them grow. In return for financing, these small businesses are required to pay a certain amount of their profits to the BDC. And then, as required by law, the BDC must pay 90% of the money they receive from the small businesses back to shareholders in the form of dividends. It's not unusual for BDCs to have dividend yields of over 8%. Some of them pay monthly, but most typically pay quarterly, which isn't terrible if it's still paying massive dividend, right? Two stocks in the BDC sector stands out for me: Aris Capital Tracker and ARCC, which happens to be the most significant business development company. This one has a massive dividend yield of 8.18%. Another one I like is Newtek ticker, symbol NEWT or NEWT. Covered call ETFs and BDCs are only some investment types that pay significant dividends. There's more worth looking into, such as real estate investment trust, closed-end funds, and master limited partnerships split share funds. The bottom line is this: if you want to live off your dividends much sooner in life, target specific alternative, lesser known types of higher paying investments. Reinvest those dividends as often as possible to build your dividend portfolio significantly faster, or spend your dividends in some months, like on a nice vacation, and choose to reinvest in other months. You'll be surprised how much more motivated you'll be to be a dividend investor using this strategy. And there we go. It's quite the Hunger Games out there with the crashing of the economy. I hope you learned a thing or two about how to live off your dividends ASAP. If you have any thoughts or suggestions about the video, please do let me know in the comments below. Once again, this is Investor Facts, ensuring that all your questions are answered. If you enjoy watching the video, kindly leave a like and subscribe. Until the next time, cheers!